Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK, and I just wanted to quickly say Happy Father's Day to all of the fathers out there. And for those of you that are lucky enough to still have your father around or have at least a good relationship with your father, I hope you were able to reach out to your fathers and wish them a Happy Father's Day. And for those of you that have children, I hope your children wished you a Happy Father's Day. I'm 37 years old and actually just had my very first child. He's turning 4 months old at the end of the, 4 months old at the end of this month on the 27th. So of course, as you can see based on this t-shirt my wife bought me, it says, "You're doing great, Daddy. Happy first Father's Day, McKay and my son Grayson." So of course, having a brand new child, this Father's Day has a little bit extra meaning for me. But I just wanted to kind of let everyone out there know, that celebrates this holiday in some facet. Happy Father's Day, and hope you had a good one. Okie dokie. Now with that out of the way, I want to dive into today's content. Now it's been a while, a good solid month or more actually, since I made a video. So I thought it'd be a good idea just to kind of give you guys an update on kind of what I'm seeing with the Bitcoin price, and of course a couple of other charts like the DXY. Maybe even take a quick peek at the Bitcoin dominance chart and give you an update on that. I'll try to keep today's video on the shorter side, but I wanted to start out as we dive into today's content quickly playing kind of a flashback clip to something that I mentioned in one of the last videos that I did make as it pertains to a particular pattern on Bitcoin and a key level that, even though it's taken nearly a month to reach, was something that I've been talking about for quite some time. So we'll dive into that to start the video. And of course, as always, if that sounds interesting to you, please remember to like and subscribe, and let's go.
It's TA with MK. It's TA with MK.
Anyway, the only other thing that has some confluence that I wanted to mention as to why the $26,000 area is so important to me is it kind of governs where I've believed all along that this upside rally could go. Now, I've been on record talking a lot about the $32,500 level just because that's important, but realistically, I had a measured move that was a little bit higher based on an inverse head and shoulders pattern. Now, if you zoom in, you can kind of see this pattern where we saw a left shoulder, the rejection at about $25,000. This would make the head, another rejection at $25,000-ish or just above, right? This would make the right shoulder, and then you have the breakout. Well, you can take the trend line and you can make what we refer to, at least with this pattern, as the neckline of the inverse head and shoulders. That's just the area where both shoulders touched, right? Before the breakout happened, the breakout being right here at about 25,600-ish, right? So that's actually just a little bit below 26K, but anyways, that zone, the reason why between 25 and 26K to me is so important is because this could ultimately end up just being a big retest as well of that pattern. Okay, so fast forward to today, or as recently as I guess a couple of days ago, you can see, I've had this orange box drawn on my chart for quite some time, as you notice in that clip that I played you. But again, this right here was basically the inverse head and shoulders that I was referring to, that basically has price action dating back to last year, basically exactly a year ago. Around the 13th of June 2022, is spent all the way until earlier this year in March, around the middle of March, creating this inverse head and shoulder. It had broken to the upside. I think in my video it was floating around 28,000. Obviously that would have been sometime over here in May. And we were just talking about the idea that even though it had been kind of lollygagging, if that's still a word, around up here, that hey, if it wasn't going to break higher at that point and, hit the targets that I had spoke about in that video of like 32,500 being the big one, I mentioned as high as 36K was something that I thought was still in the cards, that a retest down here could make sense, but the biggest area I'd be looking for on these higher time frames to hold was basically this zone between 25,000 or just under and about 26K. So that being said, I know a lot of us fall victim to this, me specifically included. I have no problem admitting that it's very easy to have a higher time frame plan or idea, but to fall victim to what the lower time frames are doing. Now, some of you that trade on the lower time frames, I guess as long as you're keeping track of what's going on there, it's fine. But let's just say you're not a great trader, you're more of a long-term investor, or at least a swing trader, someone that makes looks for the bigger moves that take maybe months to play out. Well, if you get yourself caught up in these lower time frames, it's easy to, I guess, scare yourself out of what you might have already saw coming on a higher time frame. I say that just to say, hey, it was pretty easy recently when Bitcoin, had a recent pullback, a pretty sizable one. In fact, as of just June 7th, just this one day up here, you saw price action drop by like 7.5%. I didn't zoom in there, so that may be just slightly off, but somewhere around between 6 and 8%. That could scare a lot of people, but at the end of the day, this zone that I've been tracking for months is where price action has most recently bounced. So I guess the question at this point is, am I concerned? What would I be looking for to make me continue to stick to that kind of bigger time frame plan? What area now, or what type of things might make me more encouraged, and what type of things might discourage me or make me deviate a little bit from that plan. Well, the first thing that I want to do is hop over and look at the DXY chart, and then after that I want to take a quick peek at the Bitcoin dominance chart, give some very quick updates on those two charts. And then after that, we're going to come back to this Bitcoin chart to end the video out, and I'm just going to give a couple of bullish things that I'd be looking for to make me continue to be bullish, or become bullish, depending on what side. I mean, I guess I personally haven't really had a side. I haven't been tracking things as much recently as I had been due to the baby and things. But for those of you out there that maybe you're bullish, let me give you a few reasons to remain bullish, and maybe a few reasons for those of you that are bearish to remain bearish, or maybe for those of you that are bullish to flip bearish. Just in as I see it, of course, just my own personal opinion. So on the DXY, the biggest thing that I'm kind of looking at is, hey, since we've topped, how is price action responding? When I mean topped, I mean when a price action here on the monthly topped out at this 115 level and began to pull back. We've had this blue zone, which is a historic zone for the DXY, dating clear back to like the 80s, 90s, even as far back as like the 70s. It's just an area for the dollar which ranges between like 100, right above 100, maybe 100.5, all the way up to like 103. This is a very significant area on the DXY, and we're currently visiting it. I mentioned in some previous videos that it would make sense to retest that, but to become super bullish on risk on assets, we would want to see this break down below this zone. To be very it would be very encouraging to see this lose this level of 100.5 and come back down here and test this lower trend line that's been support for quite a few years, right? But until that happens, the question is, does this just bounce and make another attempt up here somewhere over the next few months, or does it continue to go lower and maybe test the lower side of this blue zone? All right, so now we're zooming to the daily chart. There's just two things I'll quickly go over that I'm watching as far as one bullish case, one bearish case as far as the DXY. Now we'll start with the bullish just to kind of get that out of the way. The bullish case would be, hey, we've put in this high up here back in early March. We bounced down here at the same area as here. However, it looks like we've confirmed a lower high. Lower high meaning that this high over here most recently at the beginning of June is lower than this high that happened back in March, right? Well, typically when you see that on most assets charts, especially on these higher time frames, what you'd be looking for at that point would be a retest most likely of the bottom of this zone in this case, or possibly even a lower high. So then it kind of eventually forms some sort of like a falling wedge or something like that. Now this isn't a traditional stock. This is the DXY, the strength of the US dollar. So I don't really chart it the same way with patterns and things like I do regular price on a stock like Apple or something, for example. But I still pay attention to these things. But what I'd really be looking for with this lower high is a retest sometime over the next few days to few weeks, most likely a few weeks, of this blue zone down here about 100.5. That would be the bullish case. That would be encouraging. As most of you know that follow my channel or other channels that talk about the DXY, is that typically if this is going up, that's bad for risk on stocks, things like Bitcoin and crypto. And if it's going down, that's good. The bearish case, on the other hand, would be, hey, we can use a few different things actually. We can use the fib retracement tool from this most recent low to this lower high and say, hey, right now it looks like it's trying to attempt to bounce at the golden pocket of that pullback, which is the 618. Maybe it goes a little deeper and bounces at like the 101, 101.5 level, which would be a little bit more relief for the markets. But it's coming across some of these major fib levels where a bounce, in the short term can make sense. One of the biggest things that I'm looking at right now to happen over the course of potentially the next few months, at least anyway, is if we double click and we look on the daily, we can see that, hey, the stochastic, which, you know, is down here in these critical low levels. If you look over here to the right, it's at just under 5.7. We can see that in the past when it's been down here, it's a bounce is most likely to happen in the near future. Now, the encouraging thing on that note is that over here, it spent some time down here as price action continued to retrace, something that it could very easily do, which would support kind of the short-term bullish case. It did that before it bounced. Back over here, kind of similar. It came down into this critical level, but you can see it spent, you know, the middle of January all the way to February, I don't know, at least another couple of weeks anyway, before it actually bounced. Does that mean that we should be excited because it's done it in the past, you know, when it was, you know, retraced a little further? Does it mean we should be bearish because it's down here most likely to bounce? I just think it means we should be cautious. We're putting together some ideas, having a plan A, plan B. And in this case, I think, is there potential for some more downside in the short term? Maybe is it even more likely, in my opinion? I would actually say yes. But the question is, how much of a rally could we potentially get out of something like Bitcoin, which we'll talk about at the end of the video if that happens. The biggest thing on the bearish side, I would say, is if we break back above the top side of this blue pattern, which is up around 103, that most likely at that point we're going to, you know, head back up here to retest this kind of major area of resistance, which is about the 106 level. I guess more accurately the 105.5 level. And at that point, I wouldn't really want any part, at least for a few weeks to months, of, you know, risk on assets. Next chart I want to dive really quickly into is the Bitcoin dominance chart. Those of you that are new to this chart, I'm not going to dive deep into an explanation in today's video. However, I will leave some links in the description to some videos I've put out that go over this chart, you know, in more depth with kind of the nuances of it. But in its simplest form, if this chart's going up, it's typically bad for altcoins, you know, things like Ethereum and all the rest of the crypto market. And if it's going down, that's typically good. The concerning thing with this chart, bigger picture, is that we have this resistance. This is the weekly chart, by the way, that dates clear back to 2021, like this time of year, but, you know, 2 years ago, back in June of 2021, where we had this resistance level up around like the 48% level. We got rejected there once, twice, again in 2021 later in the year, a third time in June of 2022, and we've actually broken out of that area here on the weekly chart, which means, hey, this area that we in the past was significant resistance and usually led to altcoin seasons, which would be kind of these times when Bitcoin dominance was trending lower. In this case, you know, fast forward to today or the last, you know, couple of weeks, we've actually broken above that blue zone, which the top side of is about 48.5%. As you can see here to the right, we're actually just under 50%. We've broken above that, so bigger picture, talking like maybe the next 6 months to possibly even like 2 to 3 years even, you know, depending on how long it lasts. This is concerning if you're a big believer in maybe the, you know, Ethereum and all the other altcoins. If you're a big Bitcoin believer, it doesn't necessarily mean, hey, Bitcoin's going to be, you know, going down or up. It doesn't mean either of those. It just means that its percentage of the crypto market is, you know, getting bigger. It's gaining strength. More money is flowing into Bitcoin than altcoins, or at least more money is flowing out of altcoins than Bitcoin. That being said, just like the last chart, the bigger picture is maybe a little more concerning, but in the shorter term, maybe the next few weeks, or at least the next few days, but I would imagine it'd be more like 1 to 2 weeks, there is potential for some upside out of altcoins, specifically, and maybe even Bitcoin, but more altcoins, because, hey, typically what we see on any chart is if you have a major breakout, you're likely to see a retest. So, you know, are we going to see that right away? Could it push a little bit higher, somewhere up here to like the 200 EMA first, which is at, you know, 51%? Definitely possible. But, you know, what happens a lot of times before these moving averages or higher levels of resistance or fib levels or all these type of things that are overhead resistance get tested, you often see a retest of the support level that was flipped. In this case, that would be anywhere between about 48.5% on down to like 47.5%, right? And if we were to see that retest at some point over the next few weeks, or, you know, potentially playing out over the course of a few weeks, that would leave some breathing room for altcoins, which we'll talk about in some of our upcoming videos, to possibly see some short-term, you know, moves to the upside. So this is just a chart that I'll keep you guys updated on. It's what I'm always watching, just to get an idea of where money's flowing and if I want or don't want to be or have my money deployed in altcoins. All right, so to finish out the video, I'm just going to give kind of one key level or zone, as I always say, of importance as it relates to the bullish case for Bitcoin over the next, few weeks, or at least the next few days to few weeks, and of course the one bearish flip side of that. So the key levels to look for. We'll start actually with the bearish side. So the bearish side, which I can give many examples, but we'll kind of just stick to one key one. When I say many examples of why this area is important, you have like this trend line here, for example, that's been support dating back to December of 2022. It's bounced on it, 3 times, most recently just the other day on the 15th of June. You've got the 200 EMA that was acting as support there. You've got the bottom of kind of this falling wedge that I've drawn. So you have a lot of confluence as to why this area, and most importantly, the one I'm going to talk about, just this zone of, basically between 25,000 up to almost 6,000, right? This orange zone. So there's 4 different reasons, and this one being the most important to me, the orange box that I have drawn, as to why this area, and just to give you a specific number maybe to watch out for, we'll just say, the low that came in, if we were to see a daily close below that 24,800-ish level, which is just under 25K, that we closed, we tested, on a wick the other day, and then we bounced, of course, pretty significantly from there. If we close below that area on a daily, and especially if we close below that level on a few days in a row, there's a very good chance that the bears have taken over at that point, and we're likely to head back down here to, at the very least, retest the 200 SMA, which is the yellow moving average on my chart. That sits currently at just under 24K, so we'll just call it 24K to keep it simple. And most likely, in my opinion, which I'll update on some future videos, I think we'd go a little bit lower, somewhere closer to like 21.5, maybe 22K. Okay then, so the flip side of this, which is the bullish idea, would be that we break above or out of this falling wedge that I have drawn on the chart, which has some confluence as well. The top trend line right now, which is kind of a zone. You can see back here, clear back to May of 2022, you can see a huge wick where price action bounced there. You can see that it was also support after this breakout. It's where price action bounced in March. And it was what was acting as support until we finally broke down, and now we're retesting it potentially as resistance. You can see that we kind of had a descending triangle going on for a while there, basically between like April and just a few weeks ago, that we broke to the downside of. So the bearish idea again would be that we, this is just a bearish retest of that before further downside somewhere down here. The bullish hopium, which is what we're going over right now, would be a break above that level, this horizontal area of previous support, which is now acting as resistance, which is around 26,800. If we could close a daily candle above that, well then in my opinion, there's a lot more ideas for upside, but the short-term idea for upside would probably be a retest, or a bearish retest anyway, back up here to like the 28,000, we'll say like 500-ish area, right? That would be what I would expect should we break above 26.8, that we're going to go to 28.6. That kind of has a nice ring to it, right? So keep an eye out for those key price levels. I appreciate you guys for sticking around to the end of the video. Again, happy Father's Day to those of you that celebrate it. And as always, on your way out, if you can do me a huge favor, if you haven't already, please remember to like and subscribe, and we'll catch you in the next one. It's